as we, of course, continue to bring you the latest news around the tariffs which have been imposed as we look to global markets were broadly in the negative territory today as market players digested the reality of higher U.S. trade tariffs being implemented on 3 of its major trading partners, namely Canada, Mexico and China effectively. We bring you some reaction as we expand the conversation with Dr. Azar Jammine, Director and Chief Economist at Econometrix, joining us for that conversation. Dr. Jammine, very good evening to you. Thank you for your time. I mean, what kind of threats do President Donald Trump's blanket 25% tariffs on Mexico and Canada open up?
They open up a substantial threat of higher inflation, interest rates that won't come down, and of course lower economic growth than would otherwise have been the case. I've been very scared of the impact of these tariff increases for many, many months, ever since Trump first mooted them, long before he was elected as president. And the simple fact is that he's imposing huge tariff increases on imports from Mexico and Canada, as well as, by the way, on China. And they, in turn, are retaliating with a series of tariffs on imports of American goods into their countries. Now, if everyone were to switch to local products, I suppose the impact would not be all that great. But in the nature of things, the world has become so integrated and supply chains are so international that what this is bound to result in is higher inflation, at least temporarily. And the apologists say, well, this will be a once-off impact, and once it fades away, we'll be back to square one. But it doesn't, I'm afraid it won't work this way. I think that what people will find is that the cost of many goods goes up, and central banks will be compelled to refrain from cutting interest rates further or anywhere near as much as previously hoped for. And we will end up with lower global economic growth, and certainly lower growth in the relevant countries that, but possibly even for the world as a whole, for other countries as well.
Yeah. With you mentioning that China has already retaliated, I mean, what does this mean for the next countries? Are we likely to see Canada following in the footsteps of Beijing? And what impact will that have?
Canada has quite categorically, I think it may have already introduced retaliatory measures. I saw amounting to $107 billion now. I haven't yet worked out how big that is in relation to the sizes of those countries, but in relation to the size of the Canadian economy, I think that's quite substantial. And Mexico, I read, was going to announce retaliatory measures over the weekend. Now, each of them puts tariffs on different kinds of products. I mean, the Chinese were in a way quite kind. They limited their tariff increases on American products to agricultural products mainly. But the danger is that will also be transmitted into technology products such as chips and so on. And then the cost of doing business is really going to increase. You've got to bear in mind that this is not a new dispensation for the world economy. There have been many periods in global history where countries have imposed high tariffs on one another. But the beauty about the world economy over the last 40, 50 years is that it has moved away from that narrative. And it found that the more that countries reduced their tariffs, the more they started trading with one another. The growth in international trade reached 3 times the level of global GDP growth and was a big driving force for higher GDP growth. And that's why globalization took off, because there seemed to be great merits in that. This represents a complete reversal of that trend.
Yeah. So insofar as the ripple effect on South African consumers, I mean, you do mention how things could get a little bit more expensive, but the opportunity to really encourage buying local, I mean, how probable is that?
In South Africa's case, the impact shouldn't be quite as great because a relatively small proportion of our trade is with America. Most of our trade is with Europe, China, and some Asian countries. Our trade with America, and most of it relates, we've got a positive trade. We've got a trade surplus with America linked to the platinum industry, and we also export quite a lot of cars. We don't import many goods directly from America. Obviously, there will be components that might carry these tariffs, but we are relatively insulated. And it's funny, the very week that Donald Trump started speaking about how there are terrible things happening in South Africa, and people started anticipating a breakdown in relations between South Africa and the United States. And we have seen one negative impact, and that was the halting of aid to fight HIV/AIDS, which is going to affect about 17%, I think, of the rollout of our antiretrovirals. But apart from that, what we did see was that the rand actually strengthened by 2% or more in the face of such polemical statements by Trump. And that was an indication to me that the real fundamental impact on South Africa is not all that great.
Yeah.
But indirectly, it could become significant if America now starts imposing big tariffs on Europe, which it has threatened but hasn't followed up on that anymore, because that will follow through if there's higher inflation in Europe, that'll feed through into South Africa as well that way.
Very well. Thank you so much. Thanks for weighing in on this discussion. Dr. Azar Jammine, Director and Chief Economist at Econometrix, weighing in on the tariff implications on Mexico, China and the likes.